So let's get to it, because our next guest in our weekly look at crypto, he sees a long bull run for Bitcoin. With his reasoning is Cory Klippsten. He is CEO at the Bitcoin savings app Swan Bitcoin. He joins us on the Zoom in LA. Hey, Cory, good to have you here with Maddie and myself. How are you?
I'm well. Thank you so much for having me on.
Well, tell us a little bit about what's been going on, first of all, in terms of your platform. Tell us a little bit of idea in terms of activity, users. Give us an idea of what we're seeing and what it tells you maybe about the Bitcoin space.
Yeah, absolutely. Yeah, I mean, first off, thanks so much for bringing me here.
Sure.
We're basically a full-fledged financial services firm at this point, though we started off as a Bitcoin savings app, I guess is fair to say, 3 years ago. Volumes are up dramatically, and it basically is perfectly correlated with the onset of the shaky ground that we found some of the banks on about 5 weeks ago. So it was kind of that March 9th, 10th, 11th with Silvergate and Signature and Silicon Valley Bank, and then kind of roiling over to Europe with Credit Suisse. And yeah, you mentioned this thesis that I'm kind of developing, and I think I've been talking about it publicly, but it's actually very much for purposes of running my own company and thinking about pace of hiring and advancing partnerships and entering new markets and rolling out new products and things like that. And basically, it made me turn very aggressive in our growth trajectory and plans. And it's specifically because I think that we have more people than ever in history that are receptive to talking about the merits of Bitcoin and what it's for. And it's cleaning up this false narrative that you saw a lot of in, call it 2020, 2021, maybe even into 2022, of Bitcoin being a near-term inflation hedge, which makes really no sense. It's not about a hedge against, CPI numbers next month or even next year. What it really is an inflation hedge in the sense of monetary debasement. So it is a hedge against the credit fiat-based system and against money printing, that sort of inflation. And I think that's true, but that really is a long-term play.
So because we only have about 6 minutes left here, and forgive me, so if net, your bullish theory on Bitcoin is what?
So specifically, I'm bullish on adoption. So number of people go up. Obviously, long term, I'm very much on record saying I expect $1 million price for Bitcoin by the end of the decade. But the path that it'll take to get there, I think, is anybody's guess. What I'm talking about is in the past 3 bull market peaks, there's only been about a 4 to 6 month window where Google search volumes have been off the charts and where a lot of people have been rushing in trying to learn about Bitcoin and get up to speed. And that's, kind of 4 to 6 months at the end of 2013, 2017, 2021. What I think we have here is something more like maybe 24 months where there's a receptive audience willing to be, as we call it, orange pilled, take the orange pill and get into Bitcoin. And everybody's interested, and companies are looking at making sure that they have enough Bitcoin on the sideline to be able to pay important vendors and make payroll in the event that their bank runs into trouble, things like that.
Well, I want to talk about the volume thing, because I keep hearing you mention different metrics that show that volume is great. We've got a story on the Bloomberg terminal and online about how volume for crypto trading seemed amazing last quarter, but if you isolate just the Bitcoin dollar trade pair, it shows that volume was among the lowest since 2020, and that's of course amid some of the regulatory chatter that's going on, and all of this comes, as I know you're very familiar with, the Binance effect question. Binance ending its zero fee trading. Does that pullback from Binance, which happened just in the month of March, decrease some of that volume to you, and to what extent are you worried about the impact of Binance?
Not worried at all about the impact of any centralized crypto casino, and at least on Bitcoin. And again, I obviously focus on Bitcoin only and don't see much future in the long run for any of the altcoins from Ethereum on down. But yeah, so I guess as far as Bitcoin volumes, if you have zero fee trading and you give beneficial rates and access to market makers so that they can sort of trade contra with favorable terms and access versus your customers, like Binance is rumored to have done over the past few years, you would see some of those volumes fall off as they are forced to cease some of that behavior. So I don't think there's any surprise that volumes would be down.
But even in the Bitcoin dollar trade, we're seeing on that pair volume down. That doesn't concern you?
Not one bit. Yeah, I mean, there's still plenty of liquidity and not much slippage. If you want to make a large buy, you can do TWAP or VWAP and still establish your position with almost no slippage on any major trading venue, including Swan.
So I just want to make sure I'm understanding. So your thesis has to do with more people maybe trading out of traditional finance and then as a result opting into Bitcoin. Is that fair?
I think it's just more and more people recognizing that, the truth that Bitcoin is the best tool for the job of store of value, which is a giant asset pile conservatively marked at 400 trillion, maybe aggressively at 900 trillion globally.
But how can you say that considering the volatility that we've seen in Bitcoin and how high it went and how hard it fell? How is that to be considered a store of value? And ultimately, you're always going to have a fixed amount, right? So it's, the dynamics of it is not necessarily like, a free trading currency.
So it is a free trading currency, and I think we're confusing a couple of things. I said it's the best tool for store of value. It's going to take, this is a technological revolution on the order of something like steam power or the information revolution or mass production or something like that. So it's going to disrupt all industries over the course of 4 to 8 decades, just like previous technological revolutions. And so when you talk about what your expectations are for where Bitcoin will eventually end up, you have to think about it in terms of what percentage of that asset pile that is currently the store of value asset pile do you think the best tool for the job will eventually take over what time frame? So, if you think that it's going to take 20% of that asset pile, then that would be $80 trillion, and you have to decide, when is it going to take that by? Is it going to be 2050? Is it going to be 2035? And then essentially you just have to right size your bet on that future, but it's going to be extremely volatile on the way. There's absolutely no way it can go in a straight line from $500 billion to say 10 or 20 or $30 trillion market cap in a straight line. It's going to have manias and wild crashes along the way as it grows into its rightful place as more and more people understand what it is.
And one of those crashes obviously being FTX, SBF, regulation is on the way. Do you have concerns at all about people getting bullish on Bitcoin given the risks that we've already seen involved in investing in cryptocurrency when you do have bad actors in the system like an SBF?
Yeah, absolutely. So, I mean, again, the non-Bitcoin crypto space is just rife with scams. Over 99% of those projects are deliberately set up to be pump and dumps. And the remainder that maybe could be honest attempts at building something still in the long run won't need their own microcurrencies. We don't live in a barter system and monetary networks trend toward one. So if there is some kind of innovation that comes out of the whole DeFi blockchain crypto complex that still gets used by people and businesses in the future, it'll use whatever the major currency is that dominates the monetary space. So it'll be dollars and Bitcoin, I think, for the rest of the century, and we'll see what happens with that battle. But that's decades off. Well, but yeah, these centralized players, they brought this regulation on themselves, right? This was outright fraud and criminality on the part of companies like FTX and Celsius, and it was some flavor of that, maybe more toward terrible risk management when it comes to Genesis, Gemini, BlockFi, Voyager, and some of these other ones that have cratered and lost their clients' money.